What is going on, everybody, and welcome to another technical analysis video where I provide you weekly technicals for the upcoming week, what I'm looking forward to, what I could be buying. So remember to go ahead and subscribe, as I do also provide a weekly update that I inform those current events that are about ready to occur during the week in my thesis for the upcoming several weeks, as I do believe you should pair the two to allow yourself the greatest advantage in a very dynamic market. So, with that being said, go ahead and drop a like and let's get this thing started. So, as far as the SPX, as you can see, we've been grinding up like crazy, despite everything that's currently going on in the background that I talked about in my weekly updates. Things continue to grind up. We are bouncing off this trend line, so it'll be very interesting to see how the market holds up despite what we've seen over the past couple sessions. We've been gapping up essentially almost overnight. There isn't really a lot of bad news coming out this week. We just got out of quad witching on Friday. So we did get some selling off a little bit last week. So again, it's very critical where we open up coming into tomorrow. Now we do want to essentially kind of hold above this 5470. If we open up below this and start retesting this trend line, we could be looking for potentially a gap fill down to that 5375, or else if we can hold this level, we'll be attempting to go back to all-time highs. Again, we're kind of in essentially price discovery mode. So we could potentially go to create new all-time highs leading into another earnings session. Again, earnings are just about a month away, or a couple of weeks away, I should say, about 2 weeks away. So just keep that in mind. We are in the last week of this earnings cycle, and then we'll start reporting earnings here in about 3 weeks or so. So just keep that in mind. So this week will be quiet. The market is pricing in a little bit more than last week, but not expecting a lot to change. We do have core PCEs to keep that in mind. So again, that's what I'm watching on the SPX. Let's go ahead and pull up Bitcoin. Now, Bitcoin, again, is consolidating very well. I keep talking about this. It's holding that's 62K very well. And essentially that resistance is sitting at that 74K. So again, I'm expecting this to continue to consolidate. But again, I keep talking about what I am anticipating, and it's not saying it's going to happen, but what I am anticipating is this to break out and give us a fake out when we start pricing in a recession to potentially drop down to the 45K. To get some liquidation. Again, you have to understand institutions are aware of these zones. So they try to break it down and liquidate people because they're aware that they have stops underneath these zones. So when they liquidate people, typically you'll get a massive spike down and then a wick, and then that's when it starts to make its true move. And considering we haven't essentially done any kind of retesting back at the 45K mark, that's what I'm anticipating to happen again, but not expecting it. It could not happen. It could just potentially break up and break out. But again, before any big move, there's a lot of consolidation here. I'm expecting a liquidation spike here to essentially maybe last a day or two and then potentially start ripping back up. So, but again, we'll see what happens there. But Bitcoin, again, consolidating nicely for a potential big move coming soon. Again, I believe we will price in a recession. The money printers will come back on, and then I think the market will correct, pricing in that recession, and then we will start making our move back up. How long we're going to continue to be playing this debt-based game, especially with people trying to offload the dollar, will be interesting. So, and how the market's going to look like in a decade. So, this may be our last decade to really do much of anything with the market continuing to push up. But again, the consumer is in bad shape already, and they'll continue to remain and get in even worse shape until interest rates change. So again, really like Bitcoin where it's currently at. The consolidation is great, but continuing to watch that. Let's take a quick look at gold here. Gold is also consolidating, something I've been comparing with Bitcoin. Looks very much the same. I'm expecting this to kind of liquidate, potentially hit the 200 when that does happen before another massive push up. Again, I think there'll be a lot of concern, even during the recession, this thing's going to explode up. So expecting a move down quick move, liquidation spike down, and then move up. So that's what I'm kind of looking at there. Again, it doesn't have to happen, but I feel strongly that that's what could potentially go happen. Again, I know this is financial advice, so again, take this with a grain of salt. And timing is definitely big for these things. But again, if you're going to get any kind of liquidation spike, I believe it'll be down, and then massive rip up is what I'm looking for there as well. Let's take a look at Tesla coming in this week. Again, a lot of consolidation. I believe the humanoid and AI sentiment of Tesla and FSD will come to fruition in the next couple months. Just like NVIDIA, I think it will start pricing in humanoids within the next year or two. FSD, I think potentially the next year. So do keep that in mind. Again, it's not saying it can happen, but that's just my intention. I do really like this setup. I think we will continue to chop for the next couple months. It may not be until the end of the year is what it looks like. Where we're coming to a point to where that stuff starts getting priced in with FSD. Even if the market price is in a recession, I don't know if we're going to go much lower than this. We could break down. I don't know if we'll get lower than 100. If we do break below this, I think it's going to be very quick, and then it might rocket back up with FSD news. So just keep that in mind. Again, not saying it will happen, but I think the possibility, the way this is setting up, could strongly happen. And I really like Tesla and what they have planned. Again, they're they just had their shareholders meeting. Really like the info they were sharing there. That's why you got some spikes here. So I really like the consolidation. This is how Tesla moves. You have long periods of consolidation, then massive moves up. So just keep that in mind. So that's what I'm looking for there. Palantir, again, another one, big one I really do like. I'm waiting for this to come down to the 20. I'd really like to break out of this trend. Been stuck in this trend forever. I would really like this to break down and start getting roughly around the 15 again. If we start pricing in a recession, I think we could potentially visit 10 briefly. But again, we have to see how this plays out. We're starting to get some top heavy on this side. Again, the market really doesn't like Palantir around this level, around this 27 mark. So we'll continue to watch and see if it can hold up. If it does get included in SPX 500, I think this thing could potentially start really breaking out to making new highs, but I think it's waiting for that approval. Again, we'll have another earnings cycle to see if it makes it or not. If not, I can see this breaking down. If it misses one more, not being included, I can't see this breaking down and start selling off pretty heavy, especially if you start talking about recession and stuff. So again, very critical level at the 20. And then my next big level here is at the 15. So I want to really start buying anything under 20 and probably more heavily around the $15 mark. So we'll continue to watch that one there. Take a quick look at SHOP. I did call SHOP around this lower level to take advantage of this first pump. I want this to break back down. I think it can start hitting 25, especially if we start selling off heavy. I think SHOP is one of those ones that will sell off heavy. I want to start buying again heavy. I want to start getting around that 25 mark, if possible, under the $30 mark. So really watching that there. But it is at support right now. So we'll see if this thing can reattempt to try to go to 81. Again, I don't like this. It's your second attempt to try to hold this trend line. You may get a weak bounce. And then, so this week is really going to matter. This earnings cycle is really going to matter. If it does start breaking some of these, a lot of these are starting to look the same. If it breaks down and starts selling off even more. PayPal, I've really liked this currently where it's at. I'm not expecting it to go to 300, but I think it has a strong case for potentially 200 the next couple of months. And it's been consolidating quite a bit. I do like the restructuring of the company. So I am back in this because it did hit my buy zone back down here at the 58. So watching this again, at least looking for 76 to this point. But I think we can at least recover. I think we'll continue to consolidate here. If the market really starts selling off heavy, we may potentially see 50 again. But we'll see. Typically, if you start worrying about recession, you get a lot more selling, especially in any kind of financial industry. So do keep that in mind. This thing could even potentially go lower than 50. But I do really like this one for when we flip and when the market starts to recover. Stock market will recover a lot faster than the actual economy. Economy has to price in a recession first. I want to keep re-emphasizing that because that is important. Once those rapid rate cuts start to happen, and we price in a recession because of whatever event, you have to understand where some of these have already been beaten down quite a bit. Like PayPal has been beaten down for a long time, and it's consolidating for a long time. And that's something I really look for in a essentially a position I really like, is when you get these long periods of consolidation on a solid company like this. I think could recover at least back to potentially 200. So that's what I'm looking for. Again, a longer swing for this one. Snow is another big one I've been bringing up. It's in that buy zone. It's not saying it can't go lower. It does have, I think it very well could make a new low, just depending on how things go. But you really want it to hold support roughly at the 26. Could potentially even play back up to the 200. Now, this thing essentially moves inverse to the market. A lot of times when the market starts selling, this thing starts ripping up. So that could be what we're setting up here, at least for a visit back to the 200. So watching this thing really closely as well. I do like Snow and the potential it has there. Security for cloud, especially with all the AI stuff going on. It's going to be extremely important. So do keep that in mind and watching that one closely. And then this SMCI news came out this week about them developing essentially the data centers for Tesla. We are getting a breakout and a retest. As long as this can essentially remain here above that 883, I think we could potentially make another run for the 1200 mark. So it could be a good one for the next couple of weeks to be watching, especially if we start getting earnings and positive sentiment around AI again. This thing could really start ripping, so just keep that in mind. If Tesla makes any announcements, especially after last week, they said that they're going to build out the AI data center for Tesla, so there could be some more positive sentiment running into the back half of the year. You have to understand we are getting into the back half of the year, which is normally a bullish cycle for the year. Unless something breaks, you have to, again, understand, unless something breaks, October is normally a pretty bad month. It's the last real big dip before the massive run up towards the back half of the year. I think at this time you should have been consolidating and buying a lot of different stocks during this particular time, because again, the back half of the year is normally a stronger part of the year. So we'll continue to watch and see what happens there. But as of right now, I do like this breakout. As long as it can hold this, it'd be great. We may even get a quick touch back down to the 746. But again, you have to be really careful, because a lot of these are very overextended, these massive run-ups. Even though I do believe in AI, how much more fuel does it have on fire? Again, I think if you're going to play this, you should really have a hard stop roughly around here, maybe a hard stop roughly around 835. I think this thing can, again, really rip if you didn't miss it this past week. But again, it could recover at least 75% of the top of this. So you're still, again, looking roughly around 1100 potentially, where this could, that's where the target is. I'm not saying it will make that there. You have to understand that's how technicals work. You have a target and you hopefully get there. And as this continues to move up, you are essentially placing stops as this thing continues to push up. So that's why the zones are important. So when it hits that zone, you set your stop right underneath that zone, and hopefully it continues to push up. If it tags you out, it tags you out. But as long as you're taking profit along the way. So, and then aside from that, SoFi, I would talk about SoFi, but again, if we aren't priced in a recession yet, I would be very careful with SoFi. I think SoFi can sell off still heavy. Riot is one I wanted to bring up. I think we're getting close to, like I said, a tailspin here. Riot could be potentially a good one. It's been consolidating a lot. I think, once we get this bull run in crypto, my price target isn't way up here. My price target is roughly around here. Could have hit 1,000. I think once crypto starts really getting a true bull market, I like the consolidation here. Solid support here around the 9. I think we could at least try to run up back up to the 18, at least get a double on that. Would be fantastic. So I do want to keep Riot on my support. Again, could get a liquidation spike again down to the 7.8 here. So I am watching that closely. So just keep that in mind. But I do, this is one I do want to potentially take a position as well. Not a huge position, but I do want to take a position in this, especially with the major crypto run. I don't think it's occurred yet. I think we're still waiting for that. Again, it's about 4 to 6 months after essentially the halving is when the true bull cycle happens. And so there's a lot of anticipation because of the spot ETFs and everything. But again, you have to ultimately understand we're looking more towards the back half of the year for a major bull run going into March. And then depending on what happens with recession, so I'm hoping that event can occur before then. So we price in everything so everything runs together, which I'm pretty sure that's how the market will run. But we may start getting some move up and then may get a fake out and sell off because of the event. Then we price in a recession, then we recover, start printing money again, and know how that essentially sequence of things will play out. So, but I do really like Riot moving forward. So we'll see how well that does play out. BA, again, it's a lot of consolidation. I don't know how this company is up at 180. They were talking about potentially the government moving in and taking over the company because there's so much, there's so many whistleblowers that are disappearing and everything else that they're going to oversee everything. And considering that they build all their planes, they're not going to let Boeing go down. So nonetheless, it's essentially holding support around 165. Not expecting it to break out at 200, but it could potentially keep playing this range. If you like playing ranges, I just don't like this company. So I don't like playing this company at all, but it is supported by the government. So if the government does step in, this thing might actually have a massive move up. So that could be potential play. Just keep that in mind. Know your bottom roughly is here about 145. Again, if we start pricing a recession, this thing has seen 100. Could get closer down to 100. It did see it briefly back here in 20. I did play this on the way up on that move there. I didn't re-enter down here, but I think we could make another revisit for the 125. Strong possibility. So to keep that in mind. But it is backed by the government, so it is. If you want to take that risk, again, I think it's a risky play. But again, we need planes, so I don't think it's going to go under anytime soon, despite all the craziness that is going on with it. And then JPM, of course, and we've talked about this, how essentially we've paused here back in October. And since that pause, if we didn't catch that pause, we would have had a new lows. So we timed it. The Fed timed it to where they paused correctly. And like I said, we would have an up cycle as soon as that happened. That's exactly what happened. Until we start massively cutting rates, will this thing start coming down, pricing in recession. But as of right now, it's topping out at the 205. And playing some pretty choppy stock market here, we did fill this gap up, and then we're back down. So again, resistance is roughly around the 200, and then again, support. You have a couple supports here at the 188, and then kind of more so down here at the 180 mark. So watching those, but again, I think if we start pricing a recession, and I mean, really, if you wanted to draw a trend line. We're kind of playing with this trend line a little bit here. It's kind of bouncing off that. Almost had a fake out, but then magically pulled its way back up. So again, you really want to watch this trend line. If we do get a solid breakdown, like a heavy selling this week, and then retesting it, that would be your entry for the downside. So there are a lot of setups with this trend line. So we really do want to be paying attention, because I do believe it's going to break here shortly, especially when you can't really make new highs. It keeps getting rejected hard like this. That means here pretty soon you will get a break of this trend and a retest and some pretty healthy selling, which is normal. But again, it all depends on timing, and what's going to happen with that timing is if we start getting a lot of bad news at one time, it could really start to spill over and start selling off heavily. So you do want to keep that in mind. You don't want to be buying at these higher levels. If you want JPM in your portfolio, I'd wait till this thing sells off at least 50% of this move, which you're looking roughly around the 150, as opposed to buying stuff up at the 205. So if at least at the 150, price in some recession just in case. That's why I pointed out PayPal and Tesla, because they've already sold off pretty heavy to this point. We're looking more towards the back half of the year. I want to start loading up on some good companies, because again, as long as the rates are high, a lot of these essentially companies will continue to suffer. So you want to make sure their cash flow is good. You want to make sure they have a good outlook in the next 5 years, a solid use case for AI if they're going to bring in AI. I think PayPal also has a very good use case for AI. They have tons of consumers already that are using PayPal all the time. So it's just implementing the AI and getting people to buy more and understand. You eliminate clicks of what they're trying to do, you get more sales, and that's exactly what they're doing with AI. And so I do believe they can do extremely well with that model moving forward. So With all that being said, if you made it this far, go ahead and drop a like. And until next time, I'll see you guys later.